All views expressed in this video are provided for informational purposes only and do not constitute an offer or solicitation to buy or sell any securities. The statements expressed herein are not intended to provide tax, legal, or financial advice, and under no circumstances should be construed as solicitation to act as a securities broker or dealer in any jurisdiction. The following may contain forward-looking information and statements that are not representative of historical facts or information or current conditions, but instead represent only the company's beliefs regarding future events, plans, and objectives, many of which by their nature are inherently uncertain and outside the company's control. All views are intended for general circulation only and do not have any regard to specific investment objectives, financial situations, or general needs of a particular person, organization, or institution. We urge you to please consult an investment professional before making any investment decisions to ensure that they fit within your risk tolerance and investment suitability. Please do not hesitate to contact us should you want to know more information about the information in this video or have any related questions. For those of you joining us today, thank you for giving us your lunch hour and your time and joining us for our My Wealth video series. My name is Jeff Hunter, and I'm a portfolio manager with the Townsend, Samani, and Hunter Group at Canaccord Genuity. Also on the line is our lead investment advisors, Dave Townsend and Raheem Samani. For more information about our team and the My Wealth portfolios, please check out mywealthmanager.ca. Today's call is with Ali Haji, who is the CEO of Ion Energy, for a better understanding of lithium around the world and its growing investor intrigue. All participants have been muted, but in the chat below, feel free to direct any questions to us and we'll do our best to address them in the time permitted. Today's call will be recorded, so make sure to check your emails in the coming days for the replay information, or follow our team's Facebook page at facebook.com/mywealthmanager.ca. With that, I'll pass it over to Ali.
Thanks for the introduction, Jeff, and thanks for everybody to join us here. I think, giving up a lunch hours, it was difficult in the office days, but now that we're home, might even be even more challenging. But so thanks very much for the opportunity, and thanks for having me. Raheem sort of wanted us to keep this as conversational as possible, and I think that's a great idea. So I will be referring back to my slides as and when needed. And thank you for the forward-looking statements there, Jeff. So a little background about myself. I grew up in Kenya, Nairobi, East Africa. I spent sort of 18 years of my life there. Moved to Toronto and London, Ontario in particular. Finished my undergrad there in computer science with a minor in software engineering. You might be thinking, how mining? And that's a valid statement. My father's been in mining since 1998 in Zambia, so it's a bit of the family heritage or lineage, if you will. Once I graduated, I joined Invesco as an information technology asset management analyst in Toronto. I was put on a special acquisition team, moved to Hong Kong to acquire AIG's real estate business, then moved back to Toronto to work on Morgan Stanley Van Kampen's acquisition by Invesco. I worked on a number of strategic objectives to move, the AIM Trimark brand over to Invesco and make sure that it was a global entity, so to speak. More recently, I spent about 3.5 years in London, England, co-leading a center of excellence for investment operations for Invesco. So I moved back to Canada about 3.5 years ago. I joined a company called Atma as an advisor. I was an advisor to Step Gold. I co-founded Ion Energy, the company that we'll be talking about here today. And I currently sit on the board of 2 other mining CPCs on the Venture Exchange as well. So hopefully that gives you a bit of background about myself. The subject of the conversation today, lithium, the industry, where we are, how we got here, what's sort of the trends that we're seeing in the marketplace. From an industry perspective, I think it's evident that lithium stocks have had a fair run, I'd say, in the last sort of 2 months or so. A number of bought deals being announced, and for those that have been following the story, it has a lot to do with the adoption of electric vehicles and storage around the world. So Tesla might spring to mind immediately as a potential sort of electric vehicle company, and it is the most well known, I'd say. NIO in China produces, in fact, more EVs than Tesla does. And we've now found Volkswagen Group outsold Tesla last quarter as well for electric vehicles. So it's a complete shift in the way that the world is choosing to mobilize or provide transportation services as well as electric storage. And it's been prompted very much by not only advancements in battery technology, which have come a long way since the early days, 15 years ago or so, But more particularly, or more strongly rather, the governments around the world on the back of this pandemic that has us working from home. I'm in the office today, but for those of us that are joining us from home, the pandemic around the world has forced governments to reevaluate how they're going to spend money as a recovery program coming out of this pandemic. And on the back of that, the EU last year announced 750 billion euro being poured into a COVID recovery fund, 576 billion of which was footnoted with a sustainability sort of caveat, 20 billion directly allocated to EV subsidization and gigafactory development. The European Metals Association started to identify lithium and other battery metals as critical elements. The US's inauguration of Biden, that adds another 400 billion, very much the same remit. We've seen the UK come forward with £1 billion for EV subsidization and gigafactory development. And so this clean green recovery has prompted a number of companies to go public in the lithium battery metal space. It's prompted the further deployment, if you will, of an older technology by the name of LFP, so lithium ferrophosphate. And that's a new battery that has reduced the cost of a cell by 40%. It's increased range by 90%. And if you were to couple that with the government incentives that have been put forward in the last sort of year or so around the world, you end up getting what's as recently announced by Tesla, the Model Y, which is as affordable as would be a Corolla or a Civic. And as a result, the adoption and the uptake of these electric vehicles around the world has seen a significant run as well. So that hopefully talks about the industry and why we're seeing this major uptick and why it's such a hot topic today. In terms of lithium and its uses, one of the key uses for lithium is in fact electric vehicles, and the other one that's maybe not as well known is in pharmaceuticals to control bipolarism or schizophrenia. I think both of those things, given the economic state of the world and the fact that we've been locked down for so long, have had a bit of an uptick. But primarily, it is the electric vehicles that are driving the need for lithium. The way it's obtained around the world could be, a brine aquifer, which is typically what you'll find in the Atacama, in the lithium triangle. So Bolivia, Argentina, and Chile. That's where the vast majority of the lithium that goes into batteries from brine assets around the world comes from. Beyond that, it may be present in hard rock, so in spodumene, pegmatite, and the hard rock assets exist in Australia primarily. If you're familiar with Greenbushes, they're a big operation down there, and their average grade is about 1.1 to 1.2% in order to be economically viable. In LATAM or in the Lithium Triangle, if you're mining for brine, you're looking at in and about 450 and above, and you could do well. Now, mining and lithium mining in particular should be looked at more as a chemistry experiment than it should as mining. And that's because you need to ensure that the impurities that exist in these various forms of lithium being an extremely abundant element, so it's not rare. Let's make that very clear. It's unlike gold or any one of these rare earth metals that are deemed to show a lot of value because of their rarity. Lithium is abundant, so don't let anybody tell you that lithium is rare, because it's not. But the challenge with lithium is chemistry. And if you have bad chemistry, bringing it to a grade that will allow you to bring it into a battery or a Tesla that might give you a 4-year warranty or ensure that it doesn't spontaneously combust is where the true challenge lies. So with brine, for instance, you want to make sure your potassium, magnesium, calcium, and sodium ratios are low. When you're looking at hard rock, you have to be very wary of iron. There are multiple different indicators that would tell you what's a good lithium supply versus a bad one. So do keep that in mind. And that ultimately brings us to sort of the evolution or the formation of Ion Energy, the company that we're here to chat alongside Lithium. And Ion, as I mentioned, is a company that I co-founded back in 2017. It's a company that I co-founded on the back of the last lithium cycle, having been to Mongolia on multiple occasions and understanding that Mongolia is a country that's 1.5 times the size of Ontario. And for any sort of reference, that's 1.5 million square kilometers. It is a population of 3.5 million people, so barely the size of Toronto proper. Beyond that, only 3% of the country has ever been explored for minerals. So it is a very resource-rich country. If you're familiar with Turquoise Hill, Oyu Tolgoi, Rio Tinto JV, the largest copper gold, one of the largest copper gold deposits in the world is in Mongolia. So in 2017, when we started the company, we said, we know Mongolia quite well. My chairman had been there for over 10 years. And we went down the path of looking for lithium in country. When we started to look at the archives from the Ministry of Mines and the environment there, we found that there was a bit of work done in the lithium space. And so as a result of that, we started to dig deeper and we found additional information. 2016 was sort of the defining year in Mongolia where an individual did a fair bit of work to find additional lithium in country, including hard rock at up to 2.7% spodumene. So that is fairly high grade relative to what we've just discussed about green bushes. So with all that in mind, we approached the government and were able to be one of 5 parties that went for tender in 2018. In January 2019, we were granted an 81,000 hectare license in Sukhmatar province, and I'll talk to that in a second here. And Rahim, would you prefer that I bring up the slides at this point, or should we just continue down the conversation path?
Let's circle back a bit. So you mentioned some very interesting points, and you are inherently familiar with lithium. Investors sometimes not as familiar. They may expect to know things, especially coming from Alberta, where it's easier to price the dynamics of oil, just judging by various characteristics. So just relating to lithium, it's so abundant in demand, but what would be the factors you would suggest in terms of how to value or price lithium, based on quality, certain levels found in the numbers? Because what we want to do is we want to help investors understand what they're looking at when they're looking at it, and not just taking for granted what they're seeing.
Right, that's, absolutely. I think that's what we've found with a number of different companies out there today. Given sort of the trend that battery metals are hot, we've seen a number of companies go public with fairly high valuations and pretty poor grade as far as the lithium is concerned. So when I touched on it being very much a chemistry experiment, that's extremely important to note. So the Chinese side of the border of where we're operating in Mongolia, about 2,500 kilometers west of us, there are lithium brine licenses there. There are lithium brine producers there that are ultimately being refined and put into batteries. But they're not ending up in a Tesla. They're not ending up in a Neo or a Prius hybrid. They're ending up in children's toys that you might buy on Amazon, so that they can run them for about 3-4 months before they get bored of them and toss them. And that's purely because that the impurities there are never going to make it to that battery grade. There's just far too many impurities for them to be adopted or taken by any producer. And so having good quality lithium today is important. And you mentioned something about pricing, and I think that's important to point out. We can go on Kitco now and get the price of gold. We can go on the LME and get the price of copper, or whatever it may be. But lithium is a little different in that it is so ingrained in the supply chain that it's ultimately dictated. Prices are dictated based on contracts. Prices are dictated based on demand. And in the last sort of quarter here, we've seen since January, prices in China for lithium carbonate equivalent or lithium hydroxide that ends up in vehicles are now up 68%, which tells us clearly that supply is not keeping pace with demand. We know that market is starting to increase. The macro indicators are all showing us that the uptick of demand is causing these prices to come up. And there's a company by the name of Benchmark that does a fair bit of tracking for the pricing. So I'd encourage anybody that's trying to get a handle on reviewing pricing to take a look at that. Now, why pricing going up is important at this stage. If you looked at lithium prices, say 8-10 years ago, they were 10 years ago, they were doing pretty well when the likes of Namaska and everybody else went public. And then they started to crash because demand was not quite there. These government subsidies and incentives to buy electric vehicles didn't exist. China had a bit of a subsidy that they put a floor on, I believe 2 years ago. But the pricing truly, the quality will dictate the price that you will get for your lithium. So like gold, you could refine it to doré, and it's a flat rate around the world, no matter where it comes from, because it is purely that percentage pure gold. With lithium, if your impurity is, say, sodium or potassium or magnesium, calcium, if those ratios are high, one, not only do you have a major challenge coming into production and trying to extract that lithium at all, but two, if you were to take it to a refiner, you have to factor in those costs before it starts to get adopted by the ultimate end product user, that being the battery manufacturing plants. So pricing is a sensitive subject for lithium, but for an unseasoned sort of investor looking at lithium, one of the key questions you should ask is what are the impurities? Because ultimately lithium is a chemistry experiment. It's not typical mining in a typical sense. So hopefully that helps shed some light.
And maybe as a follow-up, it's similar to other resources. There's always going to be volatility, especially if lithium is in abundance, but quality lithium or maybe highly recoverable lithium is not. So low-cost production, I think, would become an element within the costing model and long-term, probably success model of certain companies. Mongolia versus LATAM versus other areas, what represents lower cost in terms of recoverable with good impurity levels in terms of taking it to market?
Sure. So LATAM, some of the terrains that you're operating under in LATAM are not forgiving, to say the least. So you will have to traverse, multiple slopes, if you want to call them that, to be quite conservative. But some of these operations are 4,000 to 6,000 meters above sea level. You need to transport goods, people, equipment, and then ultimately the end product all the way down to the porch, put it in the back of a ship, ship it to China, China being the world's largest consumer today. The advantage that we have in Mongolia is we're operating on a relatively flat terrain. The terrain is only about 1,400 meters above sea level, so we won't have the same evaporation cycles that you have in LATAM. But on the back of that, we have our license or our proximity to China. We're only 24 kilometers from the Chinese border. And at 81,000 hectares of highly prospective potential brine, we believe, knowing that our experience in country over the last 10 years has allowed us to keep costs relatively low and lower than most peers in any space that we've operated under. We would be able to bring our product to market at a price cheaper than those that are producing elsewhere. That is our hope and our intention. We also believe that as a result of proximity to market and potential scale, impurities are a concern, absolutely, as they should be. But irrespective of that, we know that for companies that will remain unnamed, they are shipping, lithium concentrate in essence to China from South America with high impurities that are then refined further in country before they're put into batteries. So knowing that the demand is so strong that folks are willing to, or consumers are willing to buy lithium with high impurities from halfway across the world and then do the refining work themselves, but us being that close to market with grades that are up to 811 ppm in one of our holes, and we still have a lot of work to do as far as de-risking and further exploration, but we also know that our impurity levels are quite low as well. So on the back of that, we think we would remain competitive as and when we were to ship or sell product to the consumers.
So very strategic, I think, in our model of access to market and being a feeder to that market.
Indeed.
You can continue on.
Sure.
Very riveting so far.
Thanks. So yeah, in terms of our actual location, it's quite exciting, and that gives us a fair bit of an advantage over anybody else, we'd say. But as far as the country is concerned, I mentioned earlier that there were hard rock occurrences found at 2.7% in spodumene. So looking at Greenbushes at 1.1, 1.2% in production, that is an additional sort of upside or strategic objective that we as a company have set out for ourselves, which is acquiring these additional licenses. Our hope with ION has always been one that goes out there to become, in essence, the monopoly in country when it comes to lithium. One of the other strategic differentiators to note is the fact that in the lithium triangle, you might have 8, 10, in some cases 20 companies sharing what's called an Endoheric Basin. And the brine assets that I talked about earlier are generally found in what's called an Endoheric Basin. So for the non-geo geeks that are on the call here, An Endoheric Basin simply means it's a drainage basin, so any precipitation that's fallen in that region has never exited to an external body of water, via a river or lake or any other such means. And the aquifers that we see in LATAM have these Endoheric basins, and that's where you're finding salt plains or underground aquifers that are then brought up to evaporate. Now, in LATAM, you might have between, like I said, 2, 4, 8, 20, in some cases, companies sharing this one Endoheric basin. And the very simple analogy I like to use is, whoever has the longest straw will end up drinking that juice. In our case, it's 1 cup, 1 straw, and that straw is ion. So if we're controlling 81,000 hectares today, we have no risk of anybody else coming in to sort of suck out the juice from beneath us. That's a huge advantage in our view, and it's one that allows us to monopolize this one potential asset. But it's also allowed us to exit or repeat that and scale that by the acquisition of an additional license. So we acquired an Urgach-Knarren license about 4 weeks ago today, and Urgach-Knarren fittingly means rising sun. What better analogy for a movement that's saying cleaner, greener energy? That Urgach-Knarren license in Dorngovi province is also an Endoheric basin, so very similar geologically. Again, we control the entire basin, so there's no competition on that land. And it's in the Dorngovi province. If you're familiar with Mongolia at all, the Oyu Tolgoi asset is in Dorngovi, and that's a very infrastructure-rich region of the country. The railway that leads into China, it runs through Dorngovi province as well. So China is a great sort of advantage and differentiator for us. Absolutely, we see that as a strong sort of suitor, either from an offtake agreement perspective, or would it be a toehold in an investment that allows them to come in for a chunk of the company and ultimately help finance bringing it to production, similar to what you might have seen with Lithium Americas, for instance. Ganfeng came in there, Mitsubishi and Magna also came in there. CATL, another battery manufacturing company, in fact, the world's largest battery manufacturer, just invested in Neo Lithium. So we see China as a big part of our future as a company, but I think it'd be foolish to ignore that Japan, Taiwan, Korea are all within what I like to call earshot. They're all battery manufacturers. CATL just put $3.5 billion into Indonesia to produce batteries there as well. So having these other countries outside of China as close as they are to us is quite exciting to us. The Germans have shown interest in working with Mongolia. They have a trade agreement in place. The US, during Trump's administration, Pompeo was there signing a trade agreement. As we know, battery metals are now considered of strategic national importance. So it's my view, and call me crazy, but it's my view that we'll start to see wars being fought over this stuff, much like it was for oil a few years ago or decades ago. So
Ali,
yes,
Dave Townsend here.
okay.
Very interesting in what you're telling us. I think that the biggest part that excited us about this story, right, before we ask you to go through the deck, right, quickly, right, and then we'll take questions, is your competitive advantage here was because you were with STEP and you were familiar with what went on. So if you can just sort of, before we ask you to just sort of breeze through the deck, how, why, and where STEP, because the audience here does not know STEP. Mongolia is, yes, there's been some big scores, but, in general, right, I think the average, investor is unaware of, right, the mineral potential, of Mongolia. Like it's, as you say, I would never have, I thought it was big, but, twice the size of Ontario, 1.5 times the size of Ontario, and so underexplored. So first, just sort of take us through STEP and what happened, and then sort of go through your deck.
Yeah, no, I'll take it a step further, David, and talk about 10 years ago when Matt Wood, my chairman, ventured into Mongolia for the first time in 2009. He did so during the last the last coal boom, and he went to Mongolia specifically looking for gold. Ended up coming to Mongolia and finding that there were a number of coal assets in country. He raised $20 million on the ASX, took a company by the name of Hunu Coal public with no assets, just a team in country and the potential to acquire assets in country. Used that $20 million to acquire a number of coal assets in country, de-risk them a tad through exploration, and then packaged them all up and sold them to to Banpu of Thailand for $500 million 18 months later. So that was the foray into Mongolia. Beyond that, you rightly mentioned Steppe Gold, and which you can see over my shoulder here, you'll see Genghis Khan and the rest of them. But Steppe Gold was a company back in 2016 we acquired from Centerra. The ATO project, Altan Tsaganovo, is up in Dornod province, just outside of Tsaganovo, Sum, beside Choibasan. So we acquired that from Centerra. We used a stream from Triple Flag Mining Finance. So Sean Usmar and the guys, the Elliott Group out of New York, also put in a fair chunk of change to help us get that acquisition in place. We acquired it from them between 2016, and by 2018, we took the company public on the TSX main board. It was the only gold mining IPO of the year that year. So it tells you, as a team, we were able to bring this over the line and list a country or a company that was in Mongolia that most people don't even know about. I believe the Centerra team had done about 50,000 or 60,000 meters of drilling, and forgive me if those numbers are off. I haven't visited the Steppe story in quite a while. We added to that drilling. When I went there for the first time, there was one tent and 6 people. I slept in one of those tents. The time that I returned, the camp was being built. So from IPO in May 2018 to push forward to March 2020, when the world went to the pandemic, Steppe produced first gold. So first gold pour was poured in March of last year when the whole world had shut down. As of last June, it's a commercial producer and came to commercial production solely on the back of Mongolian staff and the Mongolian team, slated to produce 60,000 ounces per annum at a cash cost sub 900, I believe. And again, don't quote me on that number, it might be less. But that sort of tells you the team's capabilities and what we've been able to do in country, a country that most people don't understand. We've brought from essentially an explored asset to production in shy of 24 months. If anybody's, guys on the call, I'm sure you're aware of most mining stories. But I think the number of mines that actually go into production around the world is 1 in 10, if not less. So for us to have done that so quickly in the jurisdiction that most people don't understand speaks to the abilities of the country, the team in country, and ultimately it's a reflection on those of us that have put these deals together and gone into a country with the strong belief of moving things forward.
Very impressive part of your story that let me get my microphone. Very impressive part of your story, and it shows to which other parts of the world are embracing mining, while the North American sector is pushing mining away. Right, you're in probably one of the most accommodating jurisdictions for mineral exploration and development in the world. So if you can now take us through the deck.
Sure.
We'll share the screen with you and just sort of breeze through and hit the highlights there.
Yeah, you got it. So we talked, most of that with my introduction, and you're absolutely right. We'll blast through this thing. But what I do want to share with you is ultimately from a government perspective and the relationships there. I think it's evident that we have great relationships with the government. We've built them over the last 10 years. And on the back of that relationship building, we've seen 3 governments change from 2 different political parties. And we were still able to obtain the Bavayol license. So the Bavayol license at 81,000 hectares is the largest land package that the government has ever granted a public or private company for any mineral resource exploration in country. So today we are the largest license holder for mining in country. With 81,000 hectares granted to us in January 2019, strategic location, as we've talked about, very close to the border with China. Early on to the bottom right here is where the primary border crossing to China is. The max grade that we've seen is about 811 ppm. So we're still just scratching the surface. We have a lot of work ahead of us, and I'll talk to that in just a couple of slides here. That is the Endoheric Basin. If you recall the conversation I had, or the conversation we just had with respect to sort of whoever has the longest straw drinking the juice. In our case, we control the entire Endoheric Basin, and that's the basin there outlined on the right. It is in the Gobi Desert, so you have 250 days of sunshine and very high winds that obviously would aid in our evaporation process should we choose to do that. We still have yet to make a decision as to whether or not it would be direct extraction, so DLE, or evaporation in the typical traditional sense. We'll start to understand that as we de-risk further. The exploration program, we commenced back in October last year. We've had a start and stop sort of relationship with it, much like the rest of the world. And for those of us that are in lockdown, I think we know the feeling all too well. So we started in October. We did our geophysics program on L11. We completed those at a 12 and 8 kilometer long strike. That gives us a sense of conductivity. We then started our microseismic program, which is it gives us essentially the thickness, the depth and the width of the ultimate aquifer body beneath surface. In 2019, we were pretty gung-ho on being public by PDAC, so we acquired our truck-mounted auger. That's in country now. It's capable of going down to 20 meters, and we'll be deploying that in and around the start of Q2, so in short order. We have yet to do work on LI8. I mentioned we were an on and off sort of start and stop as a result of the lockdowns in country. But the team is currently back out there, and we are expecting them to complete that work by the end of this month. So moving quite rapidly. Urgach-Narren is the second license that we acquired. I mentioned it's in Dorngovi province. That is of importance because of the infrastructure in the region, but also, again, an Endoheric Basin that we now have control over. We also have our eyes on 3 additional assets in country that we're looking to acquire, thereby increasing our foothold quite significantly. As a team, I'll run on this quite quickly. I gave you an introduction about myself when we started, and Matt, I think we've spoken about some of his accomplishments, but he is really just a mining entrepreneur by trade, but also marries the geological side of things. So he's a geological individual with a banking sort of a background as well. He was the original chairman of Avanco Resources in Brazil that sold to Oz Minerals in March 2018 for $440 million as well. One of the things about Mongolia is we work very closely with Mongolians because of the skill set in country. 20% of their GDP is driven by mining. You'll notice that half my board is Mongolian, Bata Tumurochir, who's also the CEO of Step Gold. So a lot of overlap between the Step team and my team here. But he's a special advisor to the Minister of Mines. He was with the previous government, reappointed with the existing government. We're extremely politically agnostic, as I'm sure you can tell if you've been appointed from back to back. Anil Varach, investment banking professional, ex-Dundee, ex-Goodman, and he's also director at Step. Enki is an exploration guru, credited with finding multi-million ounce gold deposits across and along the border with Russia. John McVicker, we added as our CFO after we went public. He came out of retirement because he loved our story. Lithium experience, important, very important. Paul Fornazzari, the original chairman at Lithium Americas, partner at Fasken, led their LATAM mining practice for quite a while, was a director at Neo Lithium. Lithium Americas today is worth over $3 billion. Neo Lithium is over $300 million. He was instrumental in getting the Ganfeng financing, the Mitsubishi and Magna in as well. But he was also key to getting that CATL deal done with Neo, so the recent bought deal that they did as well. He'll tell you that he wants to make sure that ION doesn't make the same mistakes that he made at Lithium Americas or at Neo. We'll make new mistakes, but that subset hopefully will be significantly smaller. Don Haynes, very technical individual. We brought him on board to oversee our exploration program remotely. He's looked for lithium around the world. He's highly respected. He wrote the framework for the 43101 process for private companies to go public. So he worked with the OSC hand in hand to define what you need in order to go public as a lithium brine company. So I'm really, really pleased to have those 2 individuals right after we went public. Dr. Hashbat, we added him about 4 weeks ago. He's the only PhD lithium hydrogeologist in country. He works hand in hand with Don to help define either acquisition targets or exploration programs. But he's also spent a fair bit of time in Japan looking at lithium extraction methodologies for lithium that he's found in Mongolia. So ultimately, when we talk about chemistry, this is an individual that will allow us to better understand it and also ultimately extract it. So we talked about our in-country experience, and I'm not going to touch on this again, but it's evident that we've been there over 10 years. We've had multiple successes in country from Hunu to Step and now ION. The intent for ION is very much that of Hunu, which is acquire, de-risk, and ultimately exit or bring in a JV partner. Step will continue to be a producer, and it has plans to bring on its CIL plant, and that'll bring its production profile to about 150,000 ounces per annum. The feasibility, I believe, is in progress now. From a location perspective, all the gigafactories in China are evident. China consumes 53% of the world's lithium. They produce 73% of the world's batteries. They refine 80% of all the lithium that goes into batteries worldwide. So that strategic advantage cannot be beat in our view. The terrain on the left, you see there that it's relatively flat, desert-like environment, no sort of major hills and mountains to traverse. The EV side of things, not going to touch on this. I think we talked about it a fair bit at the onset, but Mongolia, an extremely important country when it comes to mining. 20% of their GDP is mining driven. We've seen the governments change 3 times. I've met with multiple different members of government, including the Minister of Mines on multiple occasions. I've been in investor forums with the President and the Prime Minister, who are both from different political parties. And they will both tell you that the country is open for business. Transparency is key. And we've shown that through execution, not only of getting the largest license in the country, but also acquiring within 5 months of us being public. We went public in August last year. We raised almost $3 million, twice the amount that would have been minimum requirement from the TSX. We raised that at 30 cents. We attached a full warrant to it at 40 cents, valid for 2 years. We've seen those organically start to convert now. All the options that we've issued as listed there were issued at a price higher than the trading price on the day of issue. Fully diluted, we're about $61 million, 61 million shares, I beg your pardon. And our share price today, if I'm going to look over, is about 51 cents. So we've seen this, and anybody in this space will tell you the same. A lot of companies had a massive run up in the last two months or so. And with Tesla sort of investing in Bitcoin and doing all sorts of different things, it's ended up becoming a scenario where lithium companies are being directly tied or associated to the EV manufacturers, which is not the right way to look at it. The way we see it, we're happy with it because we're still not at our target price of 88 cents from Calor Capital or 96 cents from Stonegate and FRC. There's still a gap to fill from a valuation perspective, and we're okay with this little correction now that's happening in the market. Our market cap today is about $25 million. We've been, based on valuations from our analysts, we should be valued at in and around 40 million today. So what have we done? What are we doing? We commenced exploration, as I mentioned, results of which will be ready in about three weeks. We started trading on the OTC because of the interest in the area in the US. We have coverage from Fundamental. We acquired Urgach-Narren. We're going to start to tell you about our exploration program in a few weeks as well. And ultimately, we're excited at the prospect of de-risking the existing assets, but also looking at acquiring additional assets in country. And then last but not least, we'll start to talk to strategics in and around the end of this year to help bring in a toehold type investment. An important thing to note here, management insider ownership, I think is worth mentioning. We own 36% of the company. We've participated at every round. We are fully escrowed for 2 years. So, your typical requirement from the exchange would be a year. We forced everybody that came in at a certain price point and below to lock up for 2 years. We did that because we want to show you that we're aligned with our objectives as far as ensuring that we can acquire, de-risk, and ultimately exit at a higher currency or have a JV type scenario in 24 months from going public. So I'll sort of pause there, Dave and Reem, and happy to flip back and forth through some slides, but open to questions or any other conversational points that you guys want to make.
2 questions.
Sure.
First question is, what is the purity grade that is required for electric auto batteries or energy storage batteries?
It would be different depending on the buyer. So I don't have an exact number for you, I'm afraid.
Okay. And then, putting your CEO hat on, for your company specifically, where is your refining going to take place?
Too early to tell. One of the advantages that we have in Mongolia as a country today, I think is important to note, they don't produce anything in country. Nothing is produced in country. So there is an opportunity here for the government to step up, and they've shown that they're able to do so when they put in $3 million US into Step Gold last year in their first sovereign wealth fund investment. So they've shown the ability to step up and sort of bring on capacity where required, where it makes sense. So we've had conversations with government as far as building the ultimate refinery in country, and that's something that they would help fund along with a JV partner. But for early days, you want to, you look at, I'm not going to name names, but there are companies that went public and had massive valuations, and raise billions of dollars because they wanted to go right for the end product. What we've learned is it's better to take a scaled approach. So with STEP, we started a heap leach operation to put out 60,000 ounces a year that ultimately funds the CIL plant and funds the expansion goals. So with ION, very similarly, we're not going to expect to go straight to refinery, and we're not going to look to fund that. It's going to be sell your product off to the Chinese or whoever's buying it, have them refine it, gain profit that way, and then ultimately use those proceeds to help refine. So the front refinery right off the bat, definitely not in Mongolia. In the future, perhaps only time will tell.
And another question follows a theme that we've had in a number of calls with analysts, companies, deals with ESG. And what is ION Energy, and specifically you as the CEO, doing to ensure that ESG, and that's environmentally sustainable, and governance, what are you doing to make sure that ION is seen as a bastion for hope for the people of Mongolia, and not just a company coming in to take advantage of, let's say, a capitalistic model, but more of a mutually synergistic model with the country and the citizens?
Fantastic question, and I love answering this one, Raheem, because ESG to us was important before ESG became a thing to a lot of the funds and the sovereign wealth funds around the world. So with Hunnu Coal, most staff, 99% of all staff, were Mongolian nationals. There was only one expat on site, so we're employing local. We're ensuring that the local livelihoods are being improved by our activities in country. With STEP, that number is exactly the same. It's 98 to 99% of folks being employed by, or local folks being employed. We've built schools, we've built sanitation, sort of toilets and the like in the villages. We have paid for scholarships. We have used local co-ops to provide meat and dairy to our workers so that we're not importing any of those things. Everything is being done locally. So that's sort of an environmental or socially responsible aspect. On the ION front, the region that we're operating in today, Babayul, Sukhmatar in particular, has one of the largest wind farms in Asia. So a lot of the power is going to come from sustainable sources in order to help progress things. From a governance perspective, this is a company that operates very lean. You saw everybody that's on the director and advisory board. None of the advisors are drawing a salary. I'm the only individual in the company drawing a salary today. I'm the only one that this is my full-time job and my full-time hat. So the governance aspect is a big part of what we do. We operate lean. We're putting dollars back into the ground, and that ESG aspect of operation has been sort of the framework of how we've operated since inception and how we've always hoped to operate. So this ESG question is one that I think we check all the boxes on.
Well said. Last question for me, and the experience dealing with markets, investors, looking at companies. When you see a run-up in sectors, you do see a lot of capital flow in, and then you see companies looking for acquisitions, consolidation. You have experience in this sector. It's the 80-20, 90-10 rule. You mentioned it earlier. 10% of the companies are going to not only be sustainable themselves, but they are going to actually be where they need to be to return for their shareholders. Where do you see ION? And I think you mentioned it a little bit. You're looking to grow the market cap and then bring in a partner. But all things considered, where do you see ION, and then where do you see the sector sort of maybe the reversion of the mean per se? Things come back to earth a little bit, but then there should be some more further exuberance as the sector continues to open up.
Yeah, I'll answer that with the macro and then go down to the ION story. But the macro I see in terms of consolidation and the like, the vertical integration aspect I think is important to note, and I say that because on the back of the government spending that we saw last summer for the COVID recovery funds, the macro side of things was, well, hey, if the government's printing checks for us to better our EV sort of platform and offerings, companies like Mercedes went out and bought a stake in Ferasis, who's a Chinese battery manufacturer. That Chinese battery manufacturer went and took an offtake agreement from Greenbushes in Australia. So you start to see this vertical integration in the space, and I think we're going to see more and more of that. Every sort of vertical is going to be captured by a single entity. Tesla is doing that now with looking for nickel around the world. They're willing and happy to invest in nickel assets around the world. You have folks like BMW looking to supply or secure their own lithium supply around the world. So the macro side of things is you're going to start to see a lot of these different entities get gobbled up onto under a single sort of major. The ION story from a consolidation and sort of path forward and growth strategy. We have 3 additional targets in country that we're looking to acquire. We know that the government's willing to work with us because we're showing them that we're spending money on the ground. We're showing them that we're advancing the projects and the country. So those additional assets that we would look to acquire in country, we would de-risk them a fair bit through exploration. And then ultimately as a company, if you look at the CapEx required to take one of these things to production, with the STEP story, it was $20 million US to build a heap leach operation. And guess what? This thing's spinning out free cash flow today, right? On the ION side, if you're looking at any lithium sort of producer today, the CapEx is significant. You're talking, it could be $500 million. And that's something that we're not too keen on doing as a group ourselves. We would happily JV with somebody such as, it could be a Tesla, could be a NEO, could be a Ganfeng, could be CATL, it could be just about anybody. But these folks would come in with sort of a toehold to start and show that they're able to help us de-risk and then ultimately have them put in the capital to bring this thing to production. Now, would we sell the company entirely, so 100% exit? Potentially. Would we give them a majority stake and hang on to a tail? Absolutely. I think it's still too early to see how those conversations go, but the ultimate goal for ION would not be to bring any of these assets to production on our own.
Well done. Dave, any further questions from you?
No, I'm good. I like the plan. I like the structure. You're lean, and you're in elephant country, right? This is, what people like is a well-structured resource play, right? By people that understand, that they're not going to be mine developers. They may, but you can't, you can't go into this business and say, I'm going to be a developer. And I like that attitude. So on behalf of us all, thank you very much. Ali, it's been sort of an interesting road watching you deal with COVID and getting everything happening here. And we appreciate that you've sought us out. And again, very best of luck in Mongolia. And if we have anything further, we'll circle back and we'll get the questions to you. But again, thank you all for attending. And thank you all very much.
Bye-bye.
Okay, thanks, guys.
Thanks.